Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today, we're diving into a report from Worksport Ltd. It's about a reverse stock split, which might sound like something you'd order at a soda shop, but it's actually a financial move that can seriously impact investors. Get ready, because this could be a bumpy ride. So, what's the big news? Worksport, a company incorporated in Nevada, just did what's called a reverse stock split. Basically, they took every 10 shares of their common stock and combined them into one share. Think of it like consolidating $10 bills into a single $10 bill. The total value should stay the same, but there are some implications. This happened on March 18, 2025. Why would a company do this? Well, sometimes a company's stock price gets too low, which can make investors nervous. A reverse stock split can artificially raise the price, making the stock look more attractive. It can also help a company meet the listing requirements of stock exchanges like the Nasdaq. In Worksport's case, they did a 1-for-10 reverse split, so if you owned 100 shares before, you now own 10 shares. Now, this reverse stock split didn't change the par value of the stock, which is a technical term referring to the stock's nominal value. It's like the face value of a bond. Importantly, no one got fractional shares. If the split left you with a fraction of a share, the company rounded it up to a whole share. They didn't want to deal with tiny pieces of stock floating around. The stock started trading on the Nasdaq Capital Market on March 18th, 2025, already adjusted for the split. The stock symbol WKSP stayed the same, so you don't have to remember a new ticker, but there's a new CQZIT number. Think of it like a social security number for the stock. It's now 900 and a social security number. The company also made adjustments to its equity incentive plans. These plans are how they give employees stock options and other stock-based rewards. Because of the split, they had to change the number of shares available, the price of the options, and other details to reflect the new stock structure. It's like recalibrating the whole system to match the new reality. If you want to dive into the nitty-gritty details, you can check out Exhibit 3.1, which is the Certificate of Change to the Articles of Incorporation. It's basically the official document that spells out all the legal details of the reverse stock split. You can find it filed with this report. Now let's zoom out and think about what this all means. Reverse stock splits are often seen as a sign that a company is struggling. No company ever wants to do one. It is basically admitting to the market that their stock is down in the dumps. The intention is to artificially boost the stock price and meet requirements of the Nasdaq, since often penny stocks get delisted. It is a double-edged sword, however, since it makes a company look weak. The fact that Worksport felt the need to do this raises questions about their overall financial health and future prospects. We don't have their financials in this report, so we're missing a big part of the picture. Without those numbers, it's hard to say definitively whether this reverse split is a necessary evil or a sign of deeper problems. What we do know is that investors should proceed with caution and do their homework before buying or selling Worksport stock. It's also worth noting that for those investors already in the stock, they need to keep the new share count and CQSP in mind when buying or selling shares, or just looking at their brokerage statements. Ultimately, the success of this move will depend on whether Worksport can turn things around and deliver real value to shareholders. But for now, the reverse stock split is a red flag that demands closer scrutiny. Thanks for watching. If you found this useful, give us a like, subscribe, and leave a comment below. Let me know if there are any other reports or filings that you want me to decode. See you next time.